In today's FSI Member Spotlight, we're talking to Senior Vice President of Digital Product at KeyBank, Jonas Ng. Jonas is a financial services veteran. KeyBank, I believe, is the 29th largest bank in the U.S., somewhere between a regional bank and a national bank. Banks of this size can typically double down on innovation, and Jonas is the one driving innovation at KeyBank. I'm excited for you to hear some of the things that we talk about, whether it's innovation or digital transformation, acquiring Fintechs and rolling that into your existing product suite. Lots of learnings in this video, so let's go ahead and jump in. So Jonas, what notable trends are you watching in financial services today?
It's interesting to see what's actually happening, having been in this industry for a while. I think the first thing that we've been seeing happening over the last several decades, well before coronavirus ever hit, but you've been seeing a gradual move towards digital channels, right? Over the last several decades, customers want their money management, their financial services, their banks and their banking institutions to be available where they are, 24/7, whether it be in a branch lobby or driving, hopefully not driving in their car, but or sitting on their couch in the middle of the evening. Customers want access to their money. They want to be able to manage their finances regardless, not just when the bank happens to be open. I think the second thing that you're starting to see is that in order for banks to truly differentiate themselves, they need to be more than just a transaction manager. It's not just about the deposit that you're trying to deposit in a drive-through or at a branch teller. It's not just about the ATM transaction. In order to try and differentiate, banks have had to evolve the business model, and become much more about a financial advisor. It's about offering counsel, advice, recommendations, and insights, really just assistance and help with the customer's finances and their money and so on. It's not just about moving money from one place to another. It's really about helping you live a great financial life. And that's where banks seem to have been going over the last few years, about adding way more than just the widgets from here to there.
Great. Thank you for that, Jonas. So let's dive a little bit deeper into innovation and disruption. How do you define those terms? And I guess more specifically, how are they impacting KeyBank, if you can share something there, or maybe speak about regional banks in general?
A question about innovation, I think, is on all of your viewers' minds. And, from my own personal vantage point, I used to look at innovation as some aspirational, like lofty ideal. How do we come up with the next best thing since sliced bread? I think a lot of your viewers would probably agree with me, though, in thinking that in the last, number of years, 10 years, 20 years, 30 years, I don't look at innovation as some type of, magic bullet that happens only once in a blue moon. With the pace of technology advancement and the way that the market changes and shifts with every new innovation that hits, kind of society in general, innovation has actually become pretty much the norm. It is more just what you have to embrace on a day-to-day basis, or as we like to say at KeyBank, just embrace the madness, embrace the chaos. So if you want to look at innovation as something that magically happens once in a while, I think you're kind of kidding yourself. I think at this point, innovation is really about continuous improvement, constant innovation, constant keeping up with the marketplace, and constantly meeting your customers' needs from a very design school thinking, empathy-driven way, figuring out how your customers want you to respond to their needs, their requirements, their interests in the moment. So innovation to me is just basically something that you have to do all the time. I will also say that customers kind of come to expect things across industries. I think a lot of your viewers would probably agree that we get judged across verticals. So the innovation that they see on Amazon or at Starbucks or on Facebook will oftentimes be the same innovation that they come to expect from their grocery store or Home Depot, or in these cases, their bank, right, their financial institution. And so those innovations, whether it be access or voice response or chatbots and AI, they're seeing it in one place, they come to expect it in another.
So, Jonas, you and I have talked about this permanent shift that's happening in how regional banks and KeyBank engages with customers in this modern digital era. So, how are you and your team attempting to replicate the engagement and loyalty and trust that we typically find at the branch?
It's a fascinating topic and one that you and I have had some really interesting conversations about. And I love the fact that you're thinking about what's the forefront of what's happening in the industry and what are those permanent trends and shifts that we see already happening kind of before our eyes. I think that as I kind of alluded to before, the first main shift that we've been seeing for a number of years now is a gradual move away from the branch as your primary channel. Customers actually want you to be accessible across multiple channels in multiple ways. Actually, at KeyBank, we draw a distinction between being multi-channel and true omni-channel. So to us, there is the reality that we're confronting is that we've had multiple channels for quite some time now. Online banking, phone, mobile, obviously the branch and the drive-through. But what is more and more occurring these days is that a customer may very well start in one channel and need to finish that interaction or that engagement in another channel, true omni-channel. So a customer may very well start in online banking or chatting with you on your mobile app, but then need to call or actually finish it in the branch. Especially if the challenges or the problem that they're trying to resolve is actually more complex. So what you're starting to see is that first shift in terms of true omni-channel and not just having individual channels in which you can serve. The second thing that we are really kind of obsessive about in terms of customer experience, KeyBank is really all about that customer relationship, right? We're about providing that sense of trust, that sense of rapport, really that you can trust us with your money, but we are going to help you live a great financial life. We're going to meet you where you are, but we're going to provide you great financial wellness. The biggest challenge for us is actually that what we used to be able to do face-to-face with a physical presence is now in a 2-inch by 2-inch screen, right? So we're trying to figure out, how do I build rapport? How do I build engagement? How do I drive loyalty to my brand? How do I drive, repeat behavior? The reality is that when banks had first created online and mobile banking, I think for the most part, we designed it with utility in mind. We log you in, we get you to whatever you're trying to do, maybe pay a bill or move some money around, and then we log you right back out. In fact, the measure of success used to be how quickly we could get you to some feature or to some functionality. I think in the modern era, we are trying to replicate a storefront in a 2-inch by 2-inch glass screen. And that's difficult to do. So how do I open your eyes to new news or a product or a feature that I actually want to introduce you to, or let you know about my great new mortgage rates or what we're offering on auto loans today? And in an experience that was designed for get them in, get them out, we're trying to figure out how to also add a dimension of exploration. How do we show you? How do we open the doors? How do we introduce? How do we get you to try out new things in an interaction that was actually meant for speed? And so to me, that is the permanent shift, using a channel that was designed for one thing to try and replicate things that you use in another.
So Jonas, at a speaking engagement back in 2019 at GDS Summit, you emphasized the importance of incremental data collection to build engagement and drive personalization. What best practices have you developed at KeyBank for accomplishing this that you would be willing and able to share with us today?
So I will assume that all of your viewers are thinking about similar problems. So there's kind of two themes that we talked about at that GDS Summit. And the first theme was that from our vantage point, the way that we're engaging with our customers, we look at the data that we have on our customers in two different dimensions. There's a little bit of a dichotomy here. The first dimension is the data that, truthfully, all banks probably know about you. We know your credit score. We know how much money you make. We know where you work. We know where you live. We know if you have a family and so on. And so all banks need to kind of capitalize on the tactical data that we have been collecting on you for as long as you've been doing business with us as our customer. But there is a second dimension of data, which I refer to as kind of our metadata. And that is data that we cannot get in a database. It's not what you fill out on an application. It's actually unique to you. What are your behaviors? What are your pain points? What keeps you up at night? What about your money stresses you out? And make no bones about it, Lance, money is arguably one of the biggest stressors of consumers in this country today. In fact, people are more willing to talk about their health and disease and sicknesses than they are to talk about their money problems from empirical evidence. So the first thing that we talk a lot about is being really cognizant and very sensitive to the fact that there are two different aspects of data. One is the kind of more hard data that we collect on customers. And the other is more of that soft data, that metadata that customers volunteer, or that they kind of indicate to you, or that you need to capture based upon your interactions with them. Their goals, their anxieties, their fears, and so on. The second aspect of things is what we just alluded to, what we talked about before. The manner in which we interact with customers has changed. We used to be able to say that we can interact with you in a branch interaction. Come on in, talk to one of our bankers, sit down with us for 30 minutes. I get a captive audience, and I can shoot the moon, right? I can learn everything there is to know about you, and I will capture it all. But as the world has moved more towards digital channels, more iterative, incremental interaction, then the difficulty is that your data collection is already broken up by its definition into multiple pieces. So one of the hardest things that we've been working on at KeyBank is how to collect data incrementally and over a customer journey. Now, truthfully, it's easier said than done, because a lot of us in this industry have stood up databases and data collection meant for a transaction. I ask you 50 questions, I capture 50 pieces of data. And what we have to do is embrace a mindset and a philosophy where we're going to be doing more data collection over streaming, right? Process streaming, event streaming, and so on. So whether you're looking at things like IBM MQ or Apache Kafka, we need to be able to relay, see, capture, publish, and subscribe to data in an event-based basis or a trigger basis of data that is collected over the course of time. And so you look at the customer engagement as a journey and not just one transaction. Again, easier said than done, but the sooner that all of your viewers start realizing that the world is built over pieces, over a longer experience, then the better. You start to really rethink your data collection.
So let's talk about the role of fintechs as either disruptors or enablers or maybe something else. So KeyBank, in fact, acquired Hello Wallet back in 2017, and you guys eventually sunset that product after folding its capabilities into your primary product line. So based on that learning and that experience, what advice would you give to other financial institutions considering a partnership with or acquisition of a fintech?
Lance, really interesting question. It's a quandary that is very real these days. I can recall a time 10, 15 years ago where the institutions I worked at looked at fintechs as a threat, as a competitive threat, an industry disruptor. And truthfully, some of those fintechs actually viewed themselves with the same degree of bravado and hubris, if you ask me. I think that the industry has shifted quite a bit in the last 10 years. And I think more and more institutions, including the fintechs themselves, are starting to realize that if you treat yourself as an enabler, as a competitive advantage, as opposed to someone that's going to upend an entire ecosystem, then I think you're much more guaranteed of success. And what we have come to learn at the various companies that I've worked at is that banks bring a tremendous amount to the table. We bring a great brand. We bring distribution. Frankly, we bring an established customer base. But most importantly, we bring data. We bring priceless data to the equation. Now, oftentimes we also bring capital. And these are a number of fintechs look at the capital that you have on a bank's balance sheet with envy, right? And just salivate. And, the banks that I've worked at, KeyBank, we've looked at fintechs and looked at them with a strategic eye. What do these fintechs bring to the table? Do they bring capability? Do they bring speed to market? Have they stumbled upon a way to engage customers that we actually didn't realize was feasible, or actually that was going to be that successful? And so, we have done our fair share of acquisitions. You mentioned Hello Wallet as one. Laurel Road is another one that we acquired last year. It was a student loan mortgage lending capability and portfolio that we just bought about a year ago. You have an interesting question there. I think you're really asking, what are some of the learning lessons? What are some of the stumbling blocks that we've learned kind of the hard way in some of this fintech partnership and acquisition journey? And, I think a number of your viewers are probably experiencing the same thing. And I'll boil it down to three things. The first thing is realize at the end of the day, it's no different than any other partnership or acquisition. In this case, it just happens to be with a financial technology company. You are getting married, right? And you want to make sure that you are going to be happily married with each other. So that's not easy to do. And all your viewers who are married can certainly attest to that, right? Like, this isn't just about dating. You are putting a ring on their finger and you're getting hitched. So the first kind of learning lesson I would say there is just make sure that you are finding a partner that you can truly, grow together with, and that you are a good complement for each other. I think the second thing is that you have to strike the right balance between acquiring or partnering up with a company and kind of indoctrinating them into what makes you special and what you bring to the table, say as a bank or as an FI, or in the case of a fintech, what you bring to the table as a technology company and so on. And, you need to find that balance between merging and kind of melding those two cultures and those atmospheres, those two sets of capabilities together, but also leaving some degree of separateness so that you don't, as our chief digital officer would say, kill the butterfly. So you want to keep what it made them magical in the first place, right? What made them special, what made you realize that this could be a great acquisition or partnership. You want to try and leave as much of that intact as possible, while also bringing them into your culture and your ethos and so on. It really depends on, from institution to institution, where that balance needs to be. Some might want to just gobble it up. I kind of believe that the magic is really made where it's a little bit of a balance between the two. I think the third thing I will say is that you got to try and make sure that the whole is greater than the sum of its parts. As a standalone fintech, Hello Wallet was terrific, but it was meant for a certain aspect of personal financial management, providing a budget, allowing for customers to see everything in one place, providing insights, and giving you a great sense of where your finances kind of put you in terms relative to your peers and so on. When we acquired them, we believed that Hello Wallet was a great tool, great feature, great set of capabilities, but between Hello Wallet and KeyBank, we thought that the amalgamation of the two was truly where magic starts to happen. It was the combination of PFM and budgeting and being aware of your finances when combined with what KeyBank brings to the table. I bring great capabilities to help you make that big purchase. I bring incredible risk management. I let you have access to your actual money and not just a report of your money. And so the combination of PFM tools with true money management, true money movement is where we thought the magic was. And so we didn't acquire Hello Wallet and want to just leave it on an island. We thought that the real magic is the power of KeyBank combined with Hello Wallet as a tool. And that's why we decided to sunset Hello Wallet as a standalone and realize that the real magic is actually grafting the two onto each other.
Awesome. Jonas, thank you so much for your time today, man. I really appreciate it. It's been super fun.
Lance, thank you so much for having me on. Your endeavor and your podcast have been really fun to watch. I wish you the best of luck. Your viewers are really getting some great content here. And I love hearing the mix of folks that you get to kind of come speak with you. Some really great perspectives. So thank you so much for inviting me. I look forward to seeing more of the content that you guys produce.